Welcome back to Ferocious Education. This is Ed. Today, we're going to be talking about Sundial in terms of the due diligence technical analysis and what I think about this one. We talked about Sundial before though. You'll find my previous video in the description below. But let's jump right into this one. So today I wanted to focus on mainly one thing, the transcript from the earnings. In terms of news, we don't have much news to talk about as this company has been up to date on giving us updates. The last one was the second quarter earnings, and where they showed around a net loss of $52.3 million for the second quarter of 2021 compared to $60.4 million to the second quarter of the prior year. And we did talk about the old facility in my last video and what things need to be adjusted in order to reach that net positivity. So one of my main focuses here today that I do want to take a look at is the question and answers session from the earnings. If you would like to skip ahead towards institutional buyers and technical analysis, please do so. But let's start with this one here. So the operator asks for any questions. First off, you have Tammy Chen, BMO Capital Markets. He's an analyst, says, thanks. Good morning. First question is, I wanted to go back to the increasing of your commitment to Sunstream as pretty meaningful, increasing the capital commitment. So do you mind just elaborating about this a bit more? What are you seeing, I guess, in the pipeline that prompted you to raise the commitment so meaningfully? And Zach George, the CEO, says, hi Tammy, thanks a lot for the question. So yes, this market has been evolving very quickly, and we actually see a target pipeline well north of $1 billion in front of us. Of course, certainly that we have executed and closed on that quantum of transaction, but our increased commitment is very much in line with the expanded opportunities that we see in front of us. Then they reply back, and this pipeline of well north $1 billion. I presume that we wouldn't just be in Canada anymore. Is that correct? Are you broadening out beyond Canada for other opportunities? And then they reply, that's right, Tammy. That wouldn't just be in Canada. There are international credit and other opportunities that we're seeing. And then the analyst replies back, got it, thanks, okay, and just a follow-up. Is there any additional color you can provide on how we should think about the potential uplift in your branded sales trajectory into quarter 3 and quarter 4 with these new cultivators that you're launching? And then the CEO replies, yeah, so I will hand that to Andrew to give you a little bit more about the colors, but obviously, Tammy, we don't give forward guidance at this point in time, given that the general lack of visibility in the industry. But I will let Andrew share a few or a bit more about our excitement around cultivators and select innovation. And Andrew replies, by the way, he's the president and the COO. Thanks, Zach, and thanks, Tammy, for the question. So yes, we are very excited, very optimistic around that we have got in the market currently. I think the 3 that we're seeing very good traction on some of the highest velocities sales that we put in the market, particularly around LA Kush Cake, which is our top leaf brand, Romulan and Platinum cookies, under our Palmetto brands that we're continuing to see the move in all the markets that we have those launched. I did also mention that we're in the commercial flowering stage of 13 new genetics that we've been working with hard over the past year. And we're going to be harvesting those in quarter 3, and depending on the results, we look potentially to put some small batches in select provinces this year. But as we noted in the opening remarks, we will scale most of these that we've decided to bring to the market early parts of 2022. Now, moving on from there, there's a different analyst from Cohen and Company. They say, good morning, thank you. In terms of new cultivators that you've been hitting in the market in third quarter 2021, can you just talk about the wholesale commitment that you've already received around this product? Is it accounted for, or do you feel assured that you're going to have shelf space to sell that? And then Andrew, the president, again says, hi Vivian, it's Andrew, thanks for the question. Just to be clear, regarding the current ones we have in the market or the ones we have referenced as far as the new 13 genetics. And then they reply back, it's the new genetics. And they say, okay, perfect. Yeah, so we actually have been communicating with our customers around this kind of research and development plan. And a part of this research and development plan goes back to years ago, or a year ago, was really around what our consumers is looking for, and the input from the research, as well as the kind of feedback from our customers. what I can say is once we have harvested these, obviously got to go through the process and look at the results and make sure they meet the specs that we're requiring to launch. And then, but this currently is not our plan here to go as far as our revenue and mix goes. So we look as the potential upside, and we certainly have great feedback from customers. So yes, it is something that we would have incremental to the plan this year to go, and we're going to have to wait those results as they come down to the quarter. And they say understood. Similar question on the pre-roll. Given that you have new manufacturing equipment in place, do you feel confident there's an appetite in the market for more pre-roll capacity? And Zach, the CEO, says, yeah, look, I think it's a great question. I would view our commission of the new equipment and automation that we brought into the facility over the last 6 months have been substantial. It starts with a pretty simple view from our end that better sales requires better cannabis. And that's inclusive of all the formats we put it in there. And then they move on from there to the next person, ATB Capital Markets. The analyst asks, thank you, just wanted to touch showing in retail market. We're seeing many stores opening in Canada. There's a lot of pressure coming, especially from the value segment in retail. So can you give us some color on that strategy? How do you think that may impact your sales and your margins in Spirit Leaf's network? And how do you plan to compete there? Thanks. And they say, yeah, maybe I'll talk to that first. That's Zach, the CEO. Thanks very much for the question. Look, there's no question that retail landscape is highly competitive, and we actually expect a significant amount of attrition in space, so not at all operators are going to be successful here. I think one of our previous calls, we talked about hitting a saturation point in retail, and so we think about the premium in-store experience and connection point with our consumers, which is really exciting to us. In the phenomenal platform the Spirit Leaf has built out, along with financial stability as being key ingredients to success, and when you combine the best-in-class technology capabilities, we think we will be in a great position to not just weather the storm, but also be successful. And then they go on, okay, no, that's helpful. And then just maybe if you could talk about in terms of the mix of owned stores versus franchise. How do you see these needs evolving? What is your strategy there for expansion? And also, if you may, describe what's the value proposition there for the franchises for you guys? What are the main advantages that Spirit Leafs offer for retailers to continue to become parts of your franchise? And they said, sure, I'll pass this question to Andrew. And Andrew says, it's a great opportunity to ensure Sundial portfolio is well positioned inside the Spirit Leaf network, but we're going to be really partnering well with these franchises. And I think, as I mentioned, that my commitment, or that in my comments with regards to the Franchise Advisory Council, these operators, they have been doing this for a while. They understand what works, and we're going to be leveraging some of this research data, certainly, and actionable insights that we have to make sure that we have got in the right portfolio. And that doesn't mean 500 or 600 SKUs. The Predator rule does not discriminate in cannabis. So I think that's a value proposition we're going to be bringing. It's certainly listen first, understand what they're working, what's not working, and looking for that. And then moving on from there, another person, Sean Mayer, Canaccord Genuity, an analyst, says, good morning. The first one, I just wanted to touch on revenue line, specifically as it relates to excise taxes and the spread between gross and net revenue in the quarter. I was hoping that you could help us understand some of the underlying components and the moving parts that went into the calculation, especially as we look into the excise taxes that really resulted in a sequential decline in net revenue while the gross revenue was up 8%. The CFO said, yes. Let me just take this one up, and it really relates to around the mix between the branded sales and the LP sales. The LP sales clearly don't have excise tax on them, although basically the other one does. And so it's just a function that shifts an increase quarter over quarter to more branded products in quarter 2 over quarter 1. And then they talk about this one a little bit further. The analyst asks my second question. So on vapes, that's been the core product of the inhalable strategy for Sundial, and so I just wanted to touch a bit on that. This is now the second quarter where vapes have shown some weakness in the product mix, and you previously noticed that was a result of increased competition in the segment. And I was just wondering what your views on the ability to attack and drive sales in that segment, and how Sundial plans to recapture some of that momentum whether it may be through product innovation or increased marketing, whatever it may be. So what's that tax strategy, and what do you think are the catalysts needed to see those vape sales start progressing once again? And then Andrew here replies, thank you for the question. I think this is a good one. Vapes have been a big part of the strategy from day one. We were just one of the first to launch, and obviously you mentioned an increase in the competition that's come into this segment has been very aggressive. Maybe just I will double click on that a little bit. When you think about looking into mixed component side of vape, we have a broad spectrum as kinds of anchor that we decided to go to the market with. The lion's share that we're seeing in the vape segment is very distillates, flavors distillates to be specific, and we are monitoring that accordingly. Obviously, Health Canada has got consultation out with regards to how that's going to be viewed moving forward. So we're very aware that the potential regulations could change from time to time, and that's going to impact the distillates, flavor, discipline to be specifically as far as the relevancies goes on that front. However, all I have to say is that I think there's a couple of things we're focused on with regards to continuing to build awareness on our great portfolio vaping offerings, and we're certainly looking at a large formats, particularly in 1 gram. We also think that that continues as far as consumer preference goes on that sizing. We're also going to be launching on the back half of this year under the Top Leaf brands some innovations with regards to live resin. We think that that's also going to be another great differentiator. We have mentioned that in previous calls, we're excited to do that. And then they mentioned a little bit further, this person is Pablo Zianic. He's Cantor Vitgard analyst, and they say, good morning, I appreciate all your efforts you're making in the cannabis side, but you still have only about, by my math, less than 2% market share on the branded recreational, right? And of course, you have $1.2 billion on the balance sheets that you talked about. So it's more how you deploy the capital going forward that creates value necessary to go from 2% to 2.2 marketplace in recreational. So if I'm going right about this, I'm saying that I have to say a comment here. You have been very disciplined about how you're using your cash, right? You didn't go on and spend $350 million on a CBD brand like some of your peers. But I guess the first question would be, how do you decide when you're making minority equity investments, whether it's done through Sundial or through Sunstream? Because I suppose that Sunstream is not just lending, right? It's about equity and hybrids. Can you comment on that for us, please? And they mentioned, okay, Zach George, the CEO, thanks for the question. So the vast majority of our focus for Sunstream right now is really driving by robust opportunities that we see. It's really focused around structured credit, and some hybrid instrument opportunities. So when you're thinking about the minority investment specifically, I would say that it's a very small part of what we're focused on. And you're never going to see more than a small handful of names that we have minority equity positions in. Generally speaking, we don't see that as an area where the best risk-adjusted returns would be. We're very focused internally, and we believe that the credit opportunities in cannabis is quite large and very attractive. So when it comes to minority equity investments, those would typically be done off Sundial balance sheets and not through our joint ventures relationship with Sunstream Bancorp. Hope that helps. And they mention okay, I suppose that may include warrants and compares that eventually could be converted into equity, right? Am I talking about that? And they're saying, yes, you are potentially correct, but that doesn't necessarily mean we would end up owning the underlying equity. Their structured means earnings that returns receiving cash. There's a lot of different ways those economics can occur to a lender or an investor. And then moving on, so we're going a bit too long about this, I would say, right? So it's about growing in more than Canada. It's about investing overseas, Latin America, Europe. Can you just remind us about the equity side? Because I appreciate it again. Yes, Canada has a potential, but $1.2 billion, is it going to all to the Canadian equity investments? And they say, yes. So just for perspective, in terms of that total capital balance sheets, we do expect that it entirely or vastly to be deployed in Canada. No, not necessarily. But we're highly focused on the Canadian market and working on better understanding the evolution of the sector. You'll notice that many of our peers will direct investor attention away from Canada, focused on Europe, focused on US and the bigger markets. We're going to take advantages of these opportunities that will largely be expressed through capital that's deployed through Sunstream Bancorp when it comes through an international market. But we're laser focused on understanding what we're going in terms of consolidation, attribution, or attrition and business failures, and also common sense regulatory reform. We're starting to see that to be a key part of the equation as well. So moving on from there, just a quick thing, if you'd like to see more contents like this, make sure to click the subscribe button and notification buttons on, and don't forget to drop a like to this video. From institutional buyers, we're able to see that institution remains very active into this one. For instance, Hudson Bay and Centivia Capital added more than 500,000 of shares combined on the 16th. And in terms of insiders, things are looking a little bit quiet. But on the short volumes, more than 50% of any given day is going on towards the short volume side as a part of the total volume side. Let's move on towards technical analysis for now. From a technical analysis perspective, what we're getting to see here is that moving averages do look a bit bearish, as it's been sliding from above the dollar all the way down to almost 70 cents at this point. So we're going to disregard that, but the 80x is showing that there might be potential sometime in the next week or so to create some kind of trend. And on the 1%, R, which is very similar to the relative strength index, also known as RSI, it is showing it's highly oversold, meaning that there are a lot more selling going on than buyers. MACD seems to be stabilized around the negative side, putting itself for a positive reversal sometime next week, and momentum is a negative 0.08, even though it was before negative 0.12. So it is showing some improvements, but still negative. In terms of basically stochastic fast and stochastic slow, what you're seeing here is that there might actually be a bit of a bounce from this level, starting to push a little bit upwards, and that might be an indication that there might be a reversal again sometime next week or so. And basically what you're seeing on the Bollinger Bands is that this one is expected to trade 88 cents on the top and 69 cents at the bottom. Now keep in mind that the Bollinger Bands and the moving average bands have been slumping downwards, so that on its own is a trend. In terms of Fibonacci retracements, just to highlight quick important levels, the resistance on the Fibonacci retracement is 104, 160, 205, 250, 314, and 396. Now from a price line action though, we're seeing that there is a critical support level at the 68 cents. Below there at the 60 cents. Below there at the 50 cents, and then down to the 46, going down to the 43, and down to the 29. The resistance is though a very critical resistance at the 71 cents, and then 80 cents, going upwards to the 84 cents, 91 cents, and then up to 97 cents, going up to 105, and then 115, and then 125. And then from there on, you're able to see 142, and then a bigger jump, 157, and then around 178, going to 196, and then upwards to 217, and you get the point. Comes to the question, Ed, what do you think about this one? Well, they're definitely in a better position to go ahead and also increase production in the facility. I've heard somewhere that they're only using around 20% of their current facility production, and they can go on to a higher maximum, probably around 5 times more than their current production rates. That in result would increase their total net profits, and in all that sense, with different acquisitions and the amount of cash they do have, they're sitting on a massive loads of cash that they're able to turn their company profitable and take in use for a lot of these different companies or a lot of different opportunities that might not be coming in all around in the future, but also in the expansion process itself. What do you think about this sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.